think you should.
Hey, what's going on, guys? This is Fire Trader from firetrading.org, and I want to do our weekly market analysis and show you guys kind of what I'm looking at for the week and just kind of what we're looking at going forward, and just kind of give you guys my perspective on what I think the market's going to do and what we're just kind of what I'm seeing. So first off, we'll switch over to TrendSpider here. This is the platform that I'm using for the charting. Great platform, very innovative. I love it. Anyways, what we're looking at here on the SPY is the daily chart, and we are holding this ascending trend line. I'm sorry, this ascending channel. You guys can see between these two lines right here. We came up, got rejected at it. Now we pulled back. Now we're testing it again. So all in all, we're still holding this uptrend. We did break it on Friday, but we hit this little intersection right here, which an intersection is basically when there's 2 points of support levels, or in a different case, 2 points of resistance levels, and they can hold up, and they're very strong levels. And the reason is because there's two of them right at the same point. So this is what we saw. We saw this support level hold up, this intersection hold up here this last Friday. We did briefly break through it before, bouncing back up, and we're actually holding this channel. So, this is a pretty bullish sign. We've seen time and time again as we're, going up through this channel here. Whenever we start to get a little bit of a pull in the market, the dip tends to get bought. And Thursday we had this really nasty bearish candle form, and that was a little bit of a sign saying that we're going to get a little bit of continuation further, which we got on Friday because they didn't step in and buy the dip on Thursday. Friday, we had that nice flush in the morning, and they stepped in and they bought the dip. They brought it back above this trend. We're pretty close to the 20, the daily 20 moving average. So they are respecting these levels. So as long as we're holding above these levels, as long as we're holding inside this channel, we are ultimately holding a nice uptrend. We dipped back down, tested the 20. For me, the 20 moving average on the daily chart is going to be kind of the line in the sand, whether it's whether it's a bullish trend or it's a bearish trend. It's kind of a short term. If it's above the 20, it's bullish. Below the 20, it's bearish. Kind of just a little indicator. So, volume standpoint, we've got a lot of volume down below here on the volume by price. So we've got a nice shelf right down here towards this 324, 325 area. And we've got a little support right up here in the 341s, 341.50 to 330 area. So this is kind of what we're trying to hold. You guys can see they kind of drove it right back above, and they're trying to hold it. So this is the big support level. It's probably going to get a little bit choppy right down here in this area where we're looking at. And the reason is because they're going to try to support it here. The longer they can kind of sit here and support it, the more volume, the larger the volume shelf that they're going to build up here, which is going to be even better support level here on the SPY. Now, if we do start breaking this, we've got a lot of support right down here. I mean, you can see all this. Got a nice shelf right here around this 325 area. So if we were to break this channel, break this pivot, and kind of flush back down here, we could see it right back down here towards 325 before we start seeing some of that bottoming. But if you guys look back on one of my previous videos, I kind of explained how every time we have a pretty major pullback like we saw back here in February, March, whenever we finally find the bottom and we start trending back up and we start breaking new highs, typically what happens is we break the high and then hold above it for a little bit before pulling back. And typically whenever we have this pullback, it's generally about a 7% pullback, which on SPY from the new recent highs, the 7% pullback is going to be around 33.64. And we almost saw that, we almost saw that yesterday. We got down to this 334.50. So we were pretty close. We're about a point off. Now here going forward, typically what we see now is we see the market kind of bounce back up towards the highs, before pulling back again, and then pulling back about 5%, and then we kind of bounce back, break it again, and then we kind of do just a little bit of, breakthrough, pullback, breakthrough, pullback, breakthrough, and we get choppy. And the reason is you know, we're looking at a market cycle here. And the markets always go through cycles. The market goes up, not just the market, stocks in general. Market goes up, they pull back, go up, pull back, go up, pull back, or vice versa. They'll go down, up cycle, down cycle, up cycle. So what we're seeing right now is we saw a down cycle and we saw an up cycle. Now we're starting to see this little bit of a down cycle, and that's fine. This is natural. The way that I like to think of it, I've probably said this in one of my videos before, is when you're coming up to a resistance level, especially on anything, market, stocks, doesn't matter. You can't be extended going into a resistance level because the chances of it getting held up are high. The chances of it getting rejected are high. If you think about it, think about a snake. When a snake strikes, it has to be in a coiled up position in order for it to lash out and strike. If the snake is all the way extended and something comes by, it's not able to, shoot out further and grab it. It has to be coiled up in order for it to strike. And think about that with stocks. If a stock is overextended going into a resistance level, it's used up all of its energy. It's not coiled up. It's extended going into this resistance level. So it's not able to continue pushing. Now, if we were to come up and consolidate underneath this resistance level and then bust through it, that's when we've got the energy to be able to do so. So this is sort of what we're seeing on the market here. We're coming up to previous highs. We're a little extended, on all time frames, weekly chart, daily chart's not all that extended, but weekly chart, monthly chart, everything, all time frames are a little bit extended. So we're seeing that going into this resistance level here. And now we're just getting that little bit of a market cycle down before we can continue to turn around and start pushing back higher. But I think going forward, this coming week, we're going to have a bit of a choppy sort of downtrend. They're going to try to step in and buy the bottom here. Buy the dip. We'll see if they can support it. If not, we could see it a little lower down here towards this 325. But as long as we hold this 20 and we hold this upward trend, I think going forward this week, we're going to see a little bit of just a choppy, squeeze on top of this previous high inside this channel. For the Qs, we are still pretty extended on the monthly and the weekly chart. So for the Qs, we've got a nice volume shelf right down here. We are as well holding this upward channel, and we're trying to hold this 20 here. If we can pop back above this, it'll be interesting to see where we open up on Tuesday. Just a heads up, the market is closed on Monday. So it'd be interesting to see where we open on Tuesday. If we open below this trend line, then I think we could continue to see a little bit more of a sell-off. I think we'll see it back down here towards this 365, 360 area before, we start seeing those buyers kind of step in and start supporting it a little bit. If we do open up a little bit higher, keep holding this channel, I think we'll continue to see the dip get bought, and we'll get a push back up towards the top of this channel again up here. Okay, so I've been a little cautious lately on the last couple of weeks on our swing trades and our holds and everything, just because of how extended the market is. And things get a little bit choppy when we're extended. We don't really have the energy to continue pushing forward. So that's how I'm going in this week. I am in some long positions after that nice dip. So going forward, still just kind of dipping my toes in some positions and seeing how the market's going to pan out. I would love to see the market pull back a little bit and have a nice long, period of consolidation, so we can build up that energy so we can continue pushing forward. without having, just a total complete sell off. And, even if the dip gets bought, we start pushing back up towards highs. That's not necessarily a good sign either. It's a good sign because they're coming in and buying the dip, but we really do need some consolidation, or we need some chop and just a period of, being range bound so we can, like I said, so we can build up that energy and can continue pushing forward. Okay. So that's sort of what I'm looking at. So going forward this week, I'm still gonna be a little bit cautious on my swing positions and my holds. So yeah, that's kind of what I'm looking at. Hope you guys have a great weekend and see everyone Tuesday.